Hello, a very warm welcome from my side. My name is Henrik Rolf, Commercial Director at SCHUMANN. Almost 3 years ago, COVID-19 pandemic caused some significant disruptions in the economy. But with some time in spare, we feel this crisis was overcome quite quickly. And we see positive changes, for example, an ongoing push in the terms of digitalization. The subsequent crises, like the energy crisis or the rising inflation or the war in Europe, seem to have a quite bigger impact. Today I'm pleased to have a look on the current economic situation and discuss its impact with two experts. I'm very happy to have you both over here. A very warm welcome to my colleague and Werner Grünewald. Both of them are experts in their area. Werner spent a lot of time in his business life in the area of risk management. Before starting his own business, he was CEO of a very big international company, and he has to take care of 10 million, 50 billion transactions a year. So
Roughly, yes.
Roughly, correct. Mike, you told me this last week, over 40 years of your business life in the credit insurance industry, with, for me, hopefully also for you, the highlight of creating and founding your own trade credit insurer and running it for over 10 years. So great to have you here.
Thank you.
Werner, even before the war started, we had rising energy prices and a significantly disrupted supply chain. In your view, has the overall situation calmed down, or is it still a long way away from normal?
From my point of view, it's really a long, long way. Yes. Why do I say that? We are living more or less in a multi-crisis world. Yes. We have this climate change issue, which is a very long-term, challenge for everybody. And we have this COVID thing, yes. And we have the war in the Ukraine, this terrible war. And due to the problems there, we have these things in the change of living, yes. And that brings us to economic crisis in Europe. For some countries more, for some countries less. In Germany, we see no economic growth this year, perhaps a little one next year. We see inflation, all this, and therefore I would say it's really a long-running issue.
Mike, taking a bit the insurer view, what is your view on the current situation, perhaps especially with the focus on insolvencies or claims? Is it still normal, getting worse? How does the situation feel?
Well, first thing I would say is that I don't think in economic and financial terms that we're through the COVID crisis yet. I think the after effects are still ahead of us. In terms of the credit insurance industry, the COVID period was remarkable because the claims went away. They were historically low level of claims. I don't think anybody has seen for more than 100 years claims at this low level, and that was because of the government supports. But then, of course, the consequence of those government supports have aftershocks for years later. So, for example, one of the biggest claim areas in the moment are sovereign debt claims in Ghana, which are causing many, many claims in the market. Why did it happen? So, because Ghana, as many other countries did, had to borrow a lot of money to deal with the pandemic. So you see that all governments really, I suppose, their debt level is higher compared to GDP after the pandemic than it was before. But if you're a sub-Saharan African country and you have borrowings in dollars, then when you see, because of inflation, also an after effect of COVID and the war in Ukraine and the energy, so inflation comes up, then US interest rates come up, then the debt servicing becomes unmanageable for the debt, a country that's borrowed more. And so that's why Ghana, through no fault of their own really, are the source of many, many, many claims. The other big claim area at the moment is still in Ukraine and Russia because of the war, obviously. Lots of claims there. But going forward. Normal frequency of insolvency claims are kind of coming back to normal, I would say. They're not bad. They're coming back to normal, but the future is very uncertain. And I think that this after effect of this COVID is still ahead of us, really, in terms of the economy and finance.
It's interesting. What do you understand was normal then? What is going to normal then, from your point of view?
We would usually measure it in the insurance world as claims as a percentage of premium, and claims as a percentage of premium, you like them to be like 40 to 50%, and they're coming back.
Okay, good. That is normal. Okay, understood.
And we are not still back to the normal, so we have still less claims compared with the pre-COVID?
I think we're approaching the normal, let's say, from a position of being very, very low.
It's a bit uncertain, you said, but we're not heading into a times that are much worse.
We don't know.
We don't know.
I would agree. The numbers are moving as we speak upwards.
It's the same in Germany, Henning, yes. Quotas are increasing of insolvencies, yes. And we saw that this year, yes.
But also in Germany, we are still on the pre-COVID level, or is it worse compared?
It is a little bit worse, but we are going higher and higher, and then we will get through the line from the pre-COVID times, yes.
For us, Schumann, as well as for the market, the construction industry is quite relevant. I mean, we are very active in the wholesale area, so selling goods to construction companies, and on the other hand, a lot of insurance coverage is there in the surety market as well as for the trade credit market. How do you both see the number of insolvencies in this special market?
Yes, I would say in Germany, you can see it, can read it on the newspaper more or less every day, that real estate is going down. Yes, and that have a very clear impact to the construction area, yes, and construction companies. And we saw that in the last months, that many of these companies goes bankrupt, yes, and there is no light at the end of the tunnel right now, from my point of view.
Yeah, I think it's interesting that often when an economy is facing difficulty, the construction sector is like the canary in the coal mine. So you see it first in construction. That's been the experience in the past. Certainly, my experience as well has been that this summer we've had a lot of construction insolvencies, which has hit both the surety and the trade credit market. So perhaps it's telling us something about what could follow.
I like the picture of the canary in the coal mine. So you say, okay, it could be an outlook what will happen in other industries.
It could be. We will see. Yeah, we will see.
There is an influence, of course, yes, to other industries. Investment companies, yes, banks, everywhere.
So they might follow these insolvencies.
Yeah. But the problem's not insolvencies, but the problems to get their lended money back and to realize all their credits in their balance sheets. Yes.
And I think a downturn tends to hit construction first. The other companies feel it later on.
Over the last 2 decades, bit more than 2 decades, we saw a lot of crises, like the burst of the dot-com bubble, or in the beginning of 2000, or the global financial crisis in 2007, 2008. How comparable is the current situation with these older, or with these crises in the past?
So at the moment, not
please.
At all, right?
Yes,
not at all at the moment. And actually, we're not really in a crisis today, I would say. Crisis is too strong a word. But the outlook is really, really uncertain. So 2008 in particular, this was a balance sheet crisis. It was about banks that were over-leveraged and a lot of corporates and so on that were over-leveraged. That's not the situation today, and it won't happen again like that. So what we have today is a cocktail of other things. It's the after effect of COVID. It's the increasing government debt because of COVID. It's industry becoming addicted to government supports every time they get into trouble, which can't continue. It's the war in Ukraine. It's the decoupling of China. So like you've got all of these factors coming together. So it's a different, whatever happens, it's caused by different things and it will play out differently from 2008.
Yes, I agree. And as I said at the beginning, we have now multi-crises, or they're coming very fast. Yes. And the problem is that many people, they have no trust, yes, in the government and the economy, and they spend not so much money for the goods they need. And you see then that this missing trust brings economy into trouble, yes, because you don't spend so much money, yes, and that has a real impact now, and it has a more bigger impact tomorrow. What will happen? Yes.
Okay, so you said it's a bit more a multi-crisis and trust is relevant.
Yeah.
You said it's not a balance sheet crisis. So is this crisis a bit more real? So could be a bit more easier to steer, or is it even more uncertain because there are so many reasons?
I think it's really complicated to navigate the pathway through, as it was in 2008.
And it's overlapping. Yes, the things are overlapping. Yes, and that makes it very different to steer.
I mean, it's talked several times about AI and digitalization and chat, not only since ChatGPT. This is a very, very relevant thing. We saw a lot of brilliant technical possibilities in the market, what we can do with this AI. But to be honest, I do not see now a lot of real usages of AI in our industry. So how do you see the potential of AI in your market?
Well, so first of all, the wider insurance industry, particularly in terms of dealing with consumers, is quite technologically advanced. Mm-hmm. Okay, in some countries, it's impressive what's happening there. Mm-hmm. If we talk about the trade credit and surety industry, somewhat less so, I would say. But there is a lot more that can be done. And I know a lot of people are working on this. But what one would expect to see is two major things. So one, AI can really improve the risk assessment and to make the risk assessment more in real time. Because at the moment, one of the problems we have is we're always looking at financial statements which are out of date. Mm-hmm. And so with wider data points and AI, one can hope to get earlier warnings, right? And so, like even looking at payment experience patterns can be a way of doing that. So that would be the one thing. The other thing, apart from the improved risk assessment, is improvement in cost management. Because you can see that there are cost inefficiencies in the industry. And there's quite a lot of room for digitization and AI to actually iron out those patches of inefficiency and in turn to lower the cost. And that's really important because these are products which, particularly in trade credit, is often discretionary. And if the cost can come down, then more people will buy it and we grow the market size.
Okay, that's interesting to hear. And yeah, it's something I heard a lot of times out of the market that we or the credit insurance industry just has to look at the B2C insurers and to see whether and which ideas we could adapt. And it's good to hear from you that you see high potential in this market, because we at SCHUMANN are obviously also working on this, trying to make the risk assessment smarter, not only more cost efficient, but also smarter, and to combine various data inputs, financial statements, payment experience, and other data.
Where I see the AI coming in is that it can assimilate more data than a human can. And
Yep.
that's the beauty. And it can see patterns that the human struggles to see because the data is just too big.
Yeah.
And so I think there's space
Therefore,
there.
it's very helpful. Yes.
And you also agree that we should use the data not only to make decisions better, but also to make it faster, more cost efficient.
Yeah. That's it. Yeah.
I would love to hear a bit your personal outlook in the future, what we will see in the very, very near future, in the next months, what will happen.
So I think the future is very, very uncertain. We've said it already that there's a mixture of things happening. But I mean, in the areas that will affect surety and trade credit, for example, as I said earlier, I think we still have the full effects of COVID to deal with. I don't think that's through the system yet. So that's disruptive. But we also have a change in the situation in China. So what I mean is that for 25 years, China was growing at 10% a year, and it was adding a huge number of people to the global workforce every year, year after year, more people coming into global workforce, which had a benign effect on inflation and global growth, right? Now we see that pattern going into reverse with China. So the growth doesn't look like it will be there the same for the next 20 years, but also instead of having these people coming to the workforce, we can have the people going out of the workforce, partly because their population is not growing and partly because of the decoupling. So this will have like really profound and unpredictable effects on all of our economies and of the financial situation of countries and companies. And the last point I wanted to make is that we have a lot of uncertainty over the US election next year. If that election is not clean and is contested again, the change from having a stable US there could also have extremely unpredictable consequences everywhere in the world. And we're facing that as well. So I think it's a very, very, very uncertain outlook, very difficult.
Mike, I would agree to that. I see macro and micro challenges, as you said, from the macroeconomic point of view. The election in the US is a very heavy thing, I would say. And if you look at the G20 conference yesterday and at the weekend, you see that the world is dividing. Yes, they are the great economies, the big economies are not working together. They build up fences. You see that with the BRIC states. And it is very interesting to see what will happen. In Europe, you see everybody is making fences around their countries. Yes, that makes business not easier, yes, so to say. And if you look at the microeconomic things, the companies are stressed. Many companies are stressed. There are some clear in the energy sector which make profits. But in many other sectors, you see that these companies are stressed, that they have problems to have a very good part in their business, and that makes it, from the economic point of view, for instance, in Germany, very important to have a very clear look, and that the government will protect a little bit, not so much, but we see that right now what happened, yes. But this is not in a European way. Everybody does it for their own country, and that makes it then again difficult that all the business partners can work together. As Mike said, I agree, it is more than uncertain, it is stressing.
Thank you too for coming over, for answering these questions. I learned a lot, and hopefully we are able to share it with our followers. If you feel also this uncertainty and you have the feeling that there could be a tool, an AI, a data-driven tool, help you to solve these problems, just reach out to us, follow us on LinkedIn, social media, visit our website, or simply get in touch with our sales team. I have the feeling we can help you to steer a bit better through these times. Thank you. Thank you.
Thank you.
Thank you.